Good afternoon. Hey, look, we both pointed. Nice job, man. Good afternoon, everybody. How we doing? Welcome to Benzinga Live. I'm Spencer. That's AB, aka Aaron Bree, aka the man who's long every single meme stock in the world. We got a jam-packed show today. We got like 5 guests on today's show. I think it's gonna be
so Spencer,
insane.
right at the top at 12:10. We're going to have Randall Crowder, who's the COO of Phunware. Everyone's been talking about this stock, ticker PHUN. We've had Randall on a couple times, so excited to get Randall back on the show. And Ryan Costello will be joining us as well. And like,
from the board
from the board of directors. Yep. And like you said, I mean, we just have a jam-packed show. At 12:30, we have Kate Duchene joining us from Resources Connection. And then at 12:45, we've got kind of a special treat for our viewers. An AMA, Ask Me Anything with CarParts.com COO David Meniane and CEO Lev Peker. And so Spencer.
And then Jesse Kaler at 1.
Yeah, we'll be doing some trading with
Crazy day.
Are we doing trading with Jesse, or are we just going to be talking stocks?
Yes.
All
the answer
above.
to that question.
Yes.
Let's start the show.
Let's get ready to rumble!
ZingerNation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the PowerHour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the PowerHour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Aperna.
The best trade idea resource out there.
All right, AB, let's get things started with a news update. Quickly, we'll run through the headlines and we'll get to... I see you all in the chat. I see you. We know why you're here. We'll get to why you're here in a second. But first, real quick, let's just rip through some headlines. Go.
Yeah, so we're in the middle of earnings season. We had more earnings last night. Zillow reported, Spencer, and it was a big miss for the company. So revenue came in at $1.74 billion versus the $2 billion estimate. And Zillow, gave some interesting guidance on their home buying business, essentially saying they are closing that vertical of the business and they are cutting 25% of the company's workforce. So not good news on Zillow. We've got the chart up on the screen. What is that? It looks like it's trading down.
20%.
20%.
This is the ultimate like Wall Street bets thing, I feel like, because like you all know that the housing market's been on fire. And Zillow managed to lose money in the hottest housing market in 15 years, 14 years. So like, hey, that's like the ultimate Wall Street bet thing, I feel like.
Yeah. And the company essentially said that the uncertainty of housing prices, it just poses too much volatility on the company's balance sheet right now. So that's kind of why they're closing their home buying business, or so they say. So yeah, not a great day for Zillow. Let us know in the chat. Hopefully you weren't long the company into earnings. Let us know if you're buying the dip. I know I'm certainly not, because I mean, just not good news coming out of Zillow. Of course, the Open Door competitor. Let's check in on Open, see what Open's doing.
Oh, whoops, I skipped ahead. Okay,
we'll check in on Bed Bath & Beyond in a second, because that's the other big news.
It's okay. It's up 2%.
Okay,
we're not really sure.
Open's faring a little bit better than Zillow off of Zillow's news. So Bed Bath & Beyond just skyrocketed yesterday afternoon. And of course, the other meme stocks followed. So we had AMC, GameStop, Bed Bath & Beyond, all running yesterday. So of course, Bed Bath & Beyond still has a bunch of short interest. A bunch of short sellers just got crushed yesterday. This looks like the stock's trading up nearly 20% right now. So, good day for.
It is low, but look at the intraday chart. Look at the pre-market chart. It is well off its highs.
Yeah,
so,
I mean, hopefully that's just people taking profits. We'll definitely be watching these stocks throughout the rest of the day.
Yes,
Bed Bath & Beyond, AMC, GameStop, Spencer, ADP. The payroll company reported 571,000 new jobs added in October. That crushes the Dow Jones estimate of 395,000.
Yawn.
You don't care about jobs?
Nice spin. No, I don't care about that number. I do care about jobs. I don't care about that number.
All right.
But that was good. Good spin, man.
Well, the last news item on my day for the docket today was Lyft. Lyft reported yesterday and reported In contrast to Zillow, very strong earnings, and Lyft cited an increase in demand for rides in the previous quarter. So we see Lyft trading up today, Uber up as well, trading with Lyft. So, good day for the rideshare companies. So
Yeah.
Anything to add on?
No,
this,
not
Richard?
really. Not really. I haven't taken a Lyft since before COVID. I don't know.
Or an Uber?
If you've taken a Lyft, that's a lie. I have. I take that back. If you've taken a Lyft or Uber since COVID, drop a 1 in the chat. If you have not, drop a 2. That was such a great comment you made about I don't care about jobs. That was some great spit. I would expect that comment from one of our next guests, who is a former U.S. House Representative. He's on the board of directors at Phunware. We'll bring Ryan Costello on, along with Randall Crowder, who you all know, the COO of Phunware. Let's get them both on here right now, because that was some Washington, D.C. level spin that AB just did. So congratulations. Ryan, there he is. Randall, there he is. Good afternoon, guys. How are we doing today?
Doing well. How about yourself? Congrats on the Behringer Capital deal.
Hey, we have new bosses.
You got to throw some love your way. You
Thank
sold
you.
your soul. I know what that's like.
Yeah, we sold our soul and other things here at Benzinga. So here's what this is going to be a bit of a new thing for us, because AB and I, we got some questions, but you've heard us ask Randall questions before. So rather than just do that again, right? Yeah, he's dodging. Rather than do that again, we thought we would bring Ryan on as well, and we can have a little bit of a fireside chat and have Ryan and Randall do a little back and forth. Aaron and I are going to chime in with some questions as well. But we wanted to we thought, how can we do something different than just get another interview with me and Randall, or AB and Randall? So Ryan, welcome to the show, first off.
Good to be on.
And I want to Ryan, I want to give you the floor first. And let you sort of start things off here. The chat is all over this. I know what they want, but yeah. So Ryan, I'll open the floor to you. Why don't you start us off here and just have at it.
Sure. I grew up in the suburbs of Philadelphia. When I graduated law school, I got very into the political process. Ran for local office. Ran for county office. During that time, I was also an attorney advising companies, a lot of companies in the startup phase. Got elected to Congress, served the last 2 years of the Obama administration, the first 2 years of the Trump administration. And then since 2019, I've been a consultant for some associations and some other companies down here in Washington, D.C., and even on the private side, advising some startup companies. And so when I got to learn about Phunware and had some discussions with Randall early on, I think Randall was able to pick up that I was very excited about what Phunware does on a day-to-day basis. And I think, and I can relate this back, frankly, to when I served in Congress on the subcommittee on digital commerce and on the technology subcommittee. You need to know where the puck is going, and you need to prepare for that, and you need to go get it, and you need, frankly, create a business model around that. And I think we'll probably talk a little bit about, the role of privacy and technology policy, as well as how you can, I think, ethically provide a solution to owning your data and treating it as the commodity that it is, but monetizing it your own self and not allowing, certain big players to do it over and over and over again. And I think we'll probably talk about that in a little bit.
But what specifically drew you to Phunware? Because, you talk about skating to where the puck is going. There are a lot of cool futuristic companies out there, right? So what was it specifically about Phunware?
See, I'm interested in this answer too, because I hounded him, and it's I figured he probably wouldn't even return my call. So this will be good.
So there's 3 or 4 things. First, let me just go through, they have good people, they have strong management. Okay. Alan is a visionary, and Randall is a phenomenal operator. So, that's number 1. I think number 2, when you look at what the ethos of the company is it is not looking to monetize you. It's looking to allow you to monetize yourself. And I think philosophically that very much attracted me. Then there's two main points in terms of their business model. Number 1, and again, I served in local government. I've been involved in more political campaigns than I can share. Well, I can share, and I've served on the board of a local hospital. And if you look at the verticals that Phunware does, it has a solution for each one of those industries in a way that empowers the operator and the individual to maximize who they are and to create value for themselves and to make their lives easier, right? Getting information to the right person the right way at the right time, I think is kind of what the mantra of Phunware is. And I understood that intuitively because I've been involved in every single one of those platforms before. And most particularly for me, I mean, the political side I think is more self-evident, but on the government side, you know, I did a lot of public administration in my day. I mean, it is a phenomenal way to go about providing constituent service in a way that allows the constituent to learn and get answers on their own, interacting with government, but frankly, reducing the amount of bureaucracy that needs to be involved on a day-to-day basis. Then the final point is the fun coin, fun token, the role of cryptocurrency. You know, they are ahead of the curve. Phunware is ahead of the curve, and they have very, very smart people, And so I'm very excited to see where we go as a company. And I'll mention one final point. You know, I mentioned this to Randall the other day. I just did the National Association of Corporate Directors certification process, and you learn a lot about corporate governance as part of that. But one of the big things that you learn is, you know, when you're with a company that's on the move, you know, a lot of challenges come up, and the goal is to create the right governance model and understand what they're doing operationally so that you can empower them as a company to keep going and to keep achieving and to keep succeeding. And so that's what they're doing. And I'm proud to, you know, be involved. I'm excited for what the future holds.
Randall, if I can open it to you for a second here, maybe can you speak a little bit about you know, the political involvement that Phunware has had? I don't know how much I don't know how much you can speak about right now, but in the past, right? And the involvement with Trump's campaign and what else you've been involved in.
Yeah, no, thank you. And I think Ryan teed this up so well. I mean, that goal of, you know, what we kind of call contextual engagement. That's the future, you know, and we've ushered in a transformation in the past, going from web to mobile. Now mobile is kind of table stakes. It's what can you do with it now? If you think about just that mobile phone being a mobile computer that's location aware, that knows a whole lot about you and the world around you. And politics is such an incredible vertical for that. I mean, it's actually an honorable vertical for that. I mean, you know, that is, you know, kind of underpins, you know, our society and our life. And so how do we enable politicians to better engage their constituencies on the left and the right? And so, you know, going into, you know, we've worked on both sides of the aisle. Obviously, you know, most famously, you know, we worked on the presidential election for Trump. And that was a really exciting opportunity for us because an insider in the campaign, they were already going down a route towards Salesforce, actually. Insider in the campaign said, time out. If you want to do this, there's only one company that can do what you're trying to do. Point blank. At the time, we were managing all of Fox's entire mobile ecosystem. I mean, you have a company that could arguably buy and build anything they want, and they're outsourcing it all to Phunware. It's because we are very good at this. And there's a lot of pretenders in mobile. There's a lot of people who say, oh yeah, I can build you a mobile app, or I can do this. And when you start getting, you know, millions of people on it and transactions, they fail. You know, we set live streaming concurrent records every match of the World Cup for Fox while YouTube crashed, Google crashed. You have these Game of Thrones moments where they crash. And so for politics, they got to be secure. And they got to work at scale. And so we got introduced in the 11th hour and ended up beating Salesforce to do, you know, Trump's, you know, mobile application. It was all about engagement. So it was night and day to what Biden had. And what's cool about that is now, you know, we are, you know, building that platform for, you know, politics, both domestic and abroad. And it's incredible what we have now that we can offer. So every politician should be thinking about that. If you want, you know, the Trump experience, come to Phunware, and we can do that right now, for you. And that's what the future of engaging people in politics is going to have to be. Not only just in the virtual world to build that audience, but what you can do with that in the real world. Whether it's rallies or events, or putting people on the street to kind of build, a volunteer force. All of that can be done on a mobile application.
And
or the metaverse.
By the way, it's not a campaign. Doesn't just, you don't press start and stop on a campaign, right? Yeah. This is a 24/7, 365-day type of approach, and it's not just political candidates; it's issue advocacy organizations and associations that highly value this type of contextual engagement.
Absolutely, very, very well said.
So Ryan, you as a former congressman, you have experience, communicating with constituents. Do you think politicians need better tools to reach and engage voters in the 21st century?
So the short answer is, and every politician will say this, yes, because you're constantly trying to improve. And some of the points that Randall made, you need to find a voter where they are. That's what I would always say. Like, don't try and convince a voter that you're right. Find a voter where they are and understand why they think what they think. And if you can understand the why behind it, by the way, there's a lot of data behind that. And there's also a lot of learning that comes serving in public office when you get the why to the question. And so, just sort of adding to this, the constant engagement with constituents and with voters is really the difference between winning and losing. And so you have to constantly be you have to constantly engage in a learning process with your voters throughout the course of a campaign. Because if you look at the trajectory of a campaign, where you start, right, and where you end up, that arc, and how well you do during that arc, understanding what people are thinking and why they're thinking it, and how you can influence how they think from the perspective of informing them what your positions are, is extremely critical. And in a close race, it's the difference between winning and losing. And that's where the right type of company, the right type of engagement, enabling engagement with voters is so critical. And the data that you gather from that, by the way, that's a two-way street, right? Voters want to have engagement, sometimes on a daily basis with a candidate. And vice versa. Obviously, a candidate does.
Ryan, can you ask a question on that? Because I think obviously everybody's talking about what Trump's trying to do today, and a lot of this kind of comes from this fear or concern that the platforms we have are not good enough. Either A, there is algorithms at work that are kind of preventing your message from getting out. So you're putting out all this great content, and you're thinking in the back of your mind, is my constituency even getting it? Are we just playing for the 10% undecided in the middle? And oh, by the way, how much of this content is derived from some Russian operation? Do politicians struggle with that today? Wondering, is Facebook good enough? Is Twitter good enough?
Oh, for sure, and absolutely. I mean, to try and there's not confidence that that you get full participation on social media platforms, or that the available penumbra of information out there is equally available to everyone. And I think the objective, frankly, is to try and push through those algorithms, right? Like, not have that create a filter to what you are exposed to what you can learn from. And vice versa. You don't want your voice to be filtered back to an elected official or back to folks in some of these portals. So for sure.
There's something to be said, right, to going straight to voters, right? It's the same as going straight direct to consumer, right? It's the same idea, right? Just going around the middleman, direct to the consumer, direct to the voter. And you've seen, and I'm sure Ryan has seen this, a lot. Politicians, you've adopted newsletters, right, for marketing, right? You've adopted other technology. Are we heading to a universe where like every single candidate could theoretically have like their own app and their own platform?
Yes.
Technological platform, I mean.
I think, well, you need access to a platform.
Right. Okay.
Right. This is how important data is. Okay. And this is why having the right company avail itself to enabling you to empower the data that you have is so important. When you do television advertising, when you do a mail campaign, you don't even think about paying to print mail and to send it out until you know who your voters are, until you know who's going to vote, what issues matter to them, how likely they are to vote, and what kind of things might get them out to vote. So you spend a lot of money, right, trying to get that right before you even decide to mail anything. And successful candidates spend a heck of a lot more on data up front before they ever put any mail in the mailbox, before they do any digital ads. And so the companies that have expertise in that space and who can develop that data are the ones that you want to be associated with, because they are the ones that win campaigns.
Yeah, that's fair. Look, there's a lot of stuff being thrown out around there right now about what Phunware may or may not be being involved in. Randall, what can you say about that? And if you can't say anything, when will you be able to say something about that?
Yeah, so I Lord knows. I mean, I kind of Phunware and Ryan talked about this before. Phunware, we don't want to be a meme stock. So come for the meme, stay for the company, learn about what we actually do. We are not a GameStop or an AMC that is commercializing, a bygone business model. We're the future of what we're going to do with mobile, and politics is a huge platform for that. I think what excites me the most is like watching comments and people going, we don't care, what they're doing. This company has so many different things it can do, from blockchain to politics to healthcare to hospitality. The idea of using mobile to reach customers at a time and place when they're most likely willing to engage with a brand or an organization, that is the future of how we need to think about mobile. And so, for us, we're always going to be controlled by, compliance to Reg FD. We're always going to be controlled by, certain contracts and what we can and can't say with customers and partners. And so I think we've done a pretty good job. We've endeavored to communicate as much as we can, as transparently as we can about what we're doing. We hope all the excitement in the market is getting people to kind of learn more about what we're doing. But what we're doing specifically, in politics is building a platform for politicians to better engage, consumers. And so, if you look at, kind of, I can tease it just a little bit. Some of the, I'll share a couple of slides just from our design team that we're doing right now. Can you see that right now?
Yeah, we got it.
And so, a lot of this is all about kind of what Ryan was talking about. How do you give kind of a certain customizable feel to what you're doing in politics? We're doing this with hospitals. Hospitals have traditionally, used a third-party mobile application like MyChart if they have an Epic configuration, and it's not their content, it's not their brand. They're saying, hey, I want to control my audience, and that's absolutely how everybody should be thinking about it. And so with our platform, we can give people that control, so who you're engaging, what content's being shared, and you let some of your audience kind of opt out. You can also have more flexible control over your content. So, how do you establish a nice, rich, engaging, not just a series of headlines and news feeds that just kind of get lost in the mix. But we also, I think one of the coolest things that we had built for Trump in 2020 that we didn't get to use was, how do we do live events? How do we do ticketing? How do we gamify, real world experiences? And so we've built that and designed that into our platform as well. And just, it's all about increasing engagement. And I think that's one thing that our platform does. And Ryan mentioned, we're not coming in and saying we're going to replace everything that you use, whether you're a brand or a politician. What we do is we access everything that you use and we bring it into one environment. So it's one app to rule them all. So you can still use Instagram, you can still use Twitter, but you need to have more control over your constituency and your audience. And that's what we're bringing to the table. And I think that's what everybody's so excited about. If you think about what, got everybody so jacked up about what Trump is trying to do, it's disruption. It's disintermediating the middleman. And I think that's what people in their soul just do not feel comfortable with. That's probably the greatest threat to our democracy, is the prevention of a fair exchange of ideas. You don't necessarily have to agree with them, but by God, our system has to be in place. You know, it wasn't that long ago that people of color weren't allowed to listen to politicians or engage in politics. We're creating new censorship mechanisms in a digital world that no one's paying attention to. But there's something wrong. You know, there's a glitch in the matrix. And I think that's why, you know, when Trump came out and said, hey, look, there's got to be a better way, that got everybody excited. And we've been saying that forever. And so whether it's what we're doing with mobile software or what we're doing in blockchain to not only be able to verify, you know, who you are, but also verify your data and have you take that control over. Control is what it's all about. And I think we have the platform to enable that and the tools to enable that. We've proven it in multiple, you know, large, you know, kind of world stages with large brands like Trump, like Fox. And I think, you know, we're gonna keep being a considerable player in this space. So we're excited.
The screenshots that you just showed us, you have like an ETA on when we might see that in the real world?
Stand by.
Stand by. Okay, it's fair enough. And I also appreciate your answer and non-answer about what you can say and when you can say it. But there, you know, I'm looking at our chat right now and it's going berserk. Like at what point do you acknowledge that they want to know, right? They want to know what you're working on, who you're working with. You know, at what point can you share it with them?
You know, everything with us is going to be, for those that, you know, that aren't familiar, you know, there's a regulation, fair disclosure that, you know, we have to abide by. And so, you know, we, again, unless it comes out in a press release, you know, we don't really talk about it. Unless it comes out in our earnings, we don't really talk about it. I think what people need to understand is that these kind of transformations are not acute. They're not something that happens overnight. You know, Facebook didn't build Facebook overnight, and Facebook didn't monetize Facebook for many years to come.
Right.
And so I hope people are looking at, you know, our revenue guidance, you know, 50% growth in Q3, over 100% growth in Q4. I hope they're looking at a recent acquisition we did. I hope they're looking at the role we can play in politics, the role we can play in many other verticals. And I hope they're taking all that into consideration and they're excited about that. You know, I don't want to just be a flash in the pan, you know, meme stock. You know, we have a very real opportunity to affect real change and usher in an entirely new paradigm for how we think about mobile in a mobile first world that's quickly becoming mobile only. So, you know, I respect that everybody is really excited about single pieces of news. I think a lot of that is day traders. The people who have been writing me for the past week saying, thank you, you changed my life. They got in when we were below $1, and they've been building positions in Phunware for a year or more. And so, you know, I hope people aren't just here for a quick flip in a day trade. I hope they're realizing that, you know, we actually have a tiger by the tail, something very considerable that could, you know, really impact the world in a positive way, especially in the political vertical. And I hope that they're, you know, excited about the future, not just any one engagement.
Right, Ryan, what do you make of all this, you know, because you've known Randall for longer than, you know, there's recent period of excitement here. So what do you make of all this excitement?
Listen, it's an opportunity. When you have, you know, the light shining on a company that is speaking to the very issues that I think a lot of people care about. I'll give you an example. Just today, you know, there's focus here in Congress on a new privacy bill, right? In the tech space, like,
yeah,
the mission of Phunware, right? To have you own your own data. It's so simple, yet it hasn't happened, right? Or if it does happen, it's because a company has made the principled choice that they are going to operate in that manner. And I think that the more that message gets spread, you know, the more folks want a seat at the table, and the more people say, you know what, that company aligns with my values. That company aligns with how I want to use my phone. That company aligns with how I want to go find customers or interact with constituents or with voters. So it's a very exciting time, to be sure.
Yeah. The point about owning your own data, I think we're only now in the last couple of years, right, grappling with our relative ignorance of the last 25 years, right, about who has our data and what are they doing with it, and do we care? Well, we didn't care until we cared, right? And now we.
And how much they've made off it.
Right? Yeah. I guess, Ryan, do you expect to, as a former congressman, do you expect that we get some more, how do I put this? I mean, I guess, do you expect this to not go away as an issue in Congress?
It's
So
not gonna go away.
a bipartisan issue in Congress.
So it is a bipartisan issue. I guess the question is, do we have a bipartisan solution? And to your point, like 5 years ago, I'm not so sure that policymakers had a full grasp on what do you mean own your own data? What does that even mean, right? And now I think everybody understands what that means, and they understand what path we've chosen to take, and how, frankly, that path has probably been misguided, and how it's led to some it's led to some unfortunate outcomes, and it's rewarded bad actors. And so the question is, how do you course correct? And how do you course correct in a manner that empowers the individual, right? Like, so when I go on the internet, or when I choose to look something up, or how I behave, will I be able to use that in a way that empowers me? And will I be able to communicate with companies, or will companies be able to identify who I am in a way that gets us connected and cuts out, frankly, the toll booth collector, right?
Yeah, that's right. Randall Crowder
stands. That's what's exciting. Is that's where Phunware stands. It's hard to necessarily put that in a 15-second commercial, but people are starting to get it.
Randall Crowder is the COO, and Ryan Costello is on the board of directors of Phunware. You all know the ticker. You all know the company. And guys, this has been great. Something different, I think. It's nice to get a third voice on here like Ryan. Sort of spice things up for us. Randall, we appreciate the screenshots. I had not seen those before, and we will be in touch and see how things develop, and keep us informed, please. The people need to be kept informed of the comings and goings and what's happening here. So we're looking forward to that, and thank you both for joining us today on Benzinga Live.
Thank y'all. Thank you. Honestly, y'all are doing an amazing job. What y'all have done for the community of investors is incredible. And so thank you for just being a part of y'all's story as well. So, this is a new day that we live in, and the more you can educate people, the better. And so we're happy to always participate.
Appreciate it. Thanks a lot, Randall. Thanks a lot, Ryan. Whoever was in the chat asking for a price target, man, we don't do that. Okay. Here, I'll give you a price target. I'll pull it out of the air right now. It would mean nothing, right? That's not what we're doing here. And also, even if I did have a price target, what value would that have to anyone? What, because I said so? Because I said it's going to 20? What does that mean? It means nothing, right? It doesn't mean anything. That's not the point here. The point is to hear from the people inside the company in the know. Obviously, Randall is very good at not answering certain questions and dipping and dodging around certain questions. As he is want to do. Frankly, I can ask what I want to ask, and I can't make him answer in any way, shape, or form. All I'll say is, I guess the only thing we can do is wait and see, right? Wait and see on the app, wait and see on who they're working with, because he didn't say. Frankly, I mean, he didn't really say. I will say I had the pleasure of speaking with Randall actually back in January, kind of when I was first starting here at Benzinga, and he was one of my favorite executives that I had gotten to speak to, just because he was so candid. Did he show you the thing, the thing, his arm thing?
Oh, that was just like a month ago. I did see that, but that wasn't, when I talked to him back in January, he was all healthy, still pumping iron, but But my only question, I guess, that I didn't get to ask would be that.
Oh, sorry, man.
If
I'd known, I would have let you ask it.
I know I didn't do a good job of telling you, but does being associated with having done Trump's app in 2020? I mean, Randall mentioned working with both sides of the aisle. Yeah. Would that make maybe members on the other side of the aisle hesitant to work with them if they have been linked to Trump? You should have asked, man. You should have asked. Hey, we'll have to get Randall Ryan back. Hey, if you liked that, you can do us the easiest solid favor in the world. Just hit the little thumbs up button on YouTube. I know it might mean nothing to you, but it really does mean something to us. So we would appreciate. I get to eat lunch if we get to a certain amount of likes. Otherwise, that's actually true. The threshold is always changing every day. And just to give you an idea of where we're at right now, I think we're at about 160, Spencer. I think Jason said 250. I get to eat lunch today. So
That's actually, I think that's the motivation for us to not get there. So you don't get that you want.
Spencer's being mean. Hopefully the chat isn't as mean as Spencer. All right, Spencer, we did say we have a packed show today. What do we have coming up next?
We're already running behind. What else is new, frankly? We have Kate Duchene. I see her here backstage. She's the CEO of Resources Connection. Hey, we're gonna talk jobs, AB. We're gonna talk jobs.
You love jobs.
Says I do love jobs. Trying to tell me I don't like jobs over here. I like jobs. Where have all the workers gone? That is going to be one of my questions for Kate Duchene. You know what? We have her here. Let's just bring her on right now. Kate Duchene. Here she is. Hey, Kate Duchene, CEO of Resource Connection, ticker RGP. How are we doing today, Kate?
Great. How are you guys? And thanks for having me.
Thanks for coming on. We need to keep this show on the tracks because it's liable to go off the tracks at times. So we're trying to keep it on the tracks. First, just tell us about Resource Connection and what you do, and then I'll get into my actual questions.
Great. So our operating name is RGP, and for some people that stands for really great people. We are a human capital firm built with a group of knowledge workers or modern professionals. We're really built to deliver professional services to the marketplace in a more modern way. And for us, that means helping our talented consultants build more of a portfolio-oriented career, meaning they can decide what projects they want to work on, when they want to work, for whom they work, and where they work. So we're a business model built for today in terms of the focus on flexibility, agility, and control for talent.
Where is all the talent, Kate? Where do all the workers go?
So it depends on what segment of the workforce you're talking about, obviously.
That's
and
fair.
I think the data, when you really dive into it, the data tells you that the workers that are taking a break right now, the demographic is kind of 30 to 45-year-olds. And I think part of what's happened post-COVID is everybody's reassessing what's important in life. And it's not about work-life balance anymore. It's really about, does work align with what matters to you as a person and as a professional? So the workers are reassessing right now. I think they're coming back, but they're going to come back in a different way. Now, for our company, our demographic is a little bit older. So we haven't seen the exodus that some other companies are experiencing. But we all have to pay attention to what talent wants, because it's a talent-driven marketplace right now. And so, you know, the companies that think they're going to come back full steam ahead with the behaviors of the past, I think are going to lose. We have to pay attention to what talent is telling us today.
Okay, I'm with you on that. So clearly the trends of the last year and a half has been very good for you and your business, right? You've just reached your highest revenue figure of the last 10 years. You beat your own guidance. That's all backward looking. The last year and a half, right? The trends of that have resulted from COVID have benefited you and your business. But now we're talking about coming out of that now, and the relative chaos of the last year and a half, year and 3 quarters, more normalizing, right? So what does that mean for your business?
Well, I think it's important to understand that COVID didn't create these trends. COVID accelerated trends that were already building in the marketplace. And that are, trends like talent wanting more control, talent wanting more flexibility, and the trends toward project-oriented deliverables. I mean, when you look back, what's happening? We're about to enter, I think, the 5th industrial revolution, right? And that is about bringing human and technology capability together. And the pace of change is happening faster and faster. Disruption is happening in every industry. Technology allows, upstarts and smaller players to challenge the behemoths in this environment. And so what's that doing to business and business leaders? It means we have to innovate faster. We have to get our groups to embrace change faster. And the kind of skills we need to pivot on different projects or change-oriented transformations means the skill sets you need in an organization are constantly changing. And so this paradigm of full-time employment being the only career path for knowledge workers is gone. And I think it's gone forever. And so there was a recent article in the Harvard Business Review, which, aligns with my thinking. I'll share that up front, which is, we're finally seeing the rise of the project economy, meaning that operational change will happen based upon project teams and not necessarily full-time equivalent employees just handling the day-to-day operations of the business. And that was, happening. Peter Drucker talked about that years and years ago, as the smartest companies will keep their core team lean and access skill sets they need to drive innovation in their organizations. And that's really what we're seeing now, which wasn't created by COVID, but was accelerated by COVID.
That sounds like it's great for the business. They can keep their costs down that way. You have yet to sell me, though, on how that's that great for me as the worker, other than flexibility, and I get to live in a van out down by the river if I want to and work on my laptop. But I hear that, and I hear no benefits, right? So
well, okay, so let's talk about that. I mean, what
Yeah.
I love talking about with you and others is that our company does offer the safety net of benefits and professional community. So it can be done. We're
Okay.
here to tell you that you can enjoy gig work and a safety net and a home and a professional community and professional development, all the things that knowledge workers want, but we deliver it in a different way. And what I'd say is it's a fabulous opportunity for talent that wants more control, wants to be able to work on projects at some of the most beloved brands, not get involved in the politics or the hierarchy of traditional kind of employment and career growth. And you can do so in a way that also protects your family, protects your healthcare needs, et cetera. And so we're really a new model for the modern age.
Yeah. Kate, I'm just curious, of all the things going on in the job market, in your business, at Resource Connection, what is the trend right now that keeps you up at night?
Hiring great people, just having enough people for our client demand. I mean, it's interesting. Our company started about 26 years ago. I mean, we spun out of Deloitte, out of the big four paradigm, but we're something very different. But it's always been about finding the best people who want to bring their problem-solving skills to the client environment. And so the only thing that keeps me up right now is making sure we attract, that we become that irresistible employer for the talent, the most sought after talent in the future. Awesome.
Kate Duchene, CEO of Resource Connection. A pleasure to chat with you, and we'll have to have you back on again as the market develops more, and whatever trends develop more that we're maybe starting to see right now, or changes, and we'll have to have you back on to discuss this, because you've got a pretty unique insight from your spot in the ecosystem. So thank you so much for joining us today. We appreciate it.
Great. Thanks for having me.
All right. We are back on time, everyone, if you can believe it. I know. And let me see here. I see our next guests. Let's get that banner off the screen. Can we do that?
Yeah, we can go ahead and do that.
Get that banner. Thank you very much.
Yeah, so coming up right now, we have carparts.com coming on for a retail investor AMA. So this is interesting. If you've never participated in an AMA before, it's an Ask Me Anything. So post your questions in the chat, and we will go ahead and pull them on the screen.
We will do that.
Yeah. So without further ado, Spencer, let's go ahead and get to it.
Let's just bring on the CEO and the COO of carparts.com, ticker PRTS, Lev Parker, David Meniane. We got him here. Let's bring them on. They're backstage. I see them. There they are. Wait a minute. Are they on mute? Can we hear you? Hello?
Looks like
Wait, I think they're on mute. Oh no! Let's see if we can unmute them.
no. I think they'll have to do it on their end.
Can you get on the something on your end, guys? Here, let's move them backstage for a second, and we'll be able to see when they're unmuted, and within the platform, they can do that. And in the meantime, everyone in the chat, we have fun bulls, we have fun bears. That's what makes the market. And just because someone disagrees with you doesn't make them necessarily wrong. It doesn't mean it's not a personal attack to be, bullish or bearish a stock. I just wanted to put that out there because we got a lot of people fired up about Phunware right now. If you missed the Phunware interview, just rewind the show like 20 minutes and you'll catch it. Do we have David and Lev unmuted? No, I still see them.
So.
They can't hear you guys. They're working on changing their speaker settings. I think they just left and
thank
joined.
you, producer Rohan. They can't even hear us. So how would they know that we were talking to them? We wouldn't. Exactly right. Disagreement is what drives the stock market. So yeah, just like that. If you ask a question in the chat, we will bring it up on the screen, provided it's appropriate, and we can, actually not be embarrassed and humiliated when we bring it up to them. So bulls in the long-term win. In the long-term stock market, that is true. We're at all-time highs. This is generally true. But of course, not all stocks go up and stay up. This is why I like ETFs. All right. I think we have them back. I think we have Lev Peker, the CEO, David Meniane, the CEO of Car Parts. Can we get them on here? Take two. I'm hitting the button.
Hold on. It looks like they still cannot hear us. We're still troubleshooting this.
Okay.
Let's see.
Actually, it looks to me like they're frozen. Oh no, they're not frozen. I think we have them, guys. Nope. All right, still working on that.
We heard them. I heard some typing on there.
Yeah, but they can't hear us, which is the problem right now.
Hey man, it's live. This is what happens on live shows. It's fun. You roll with the punches. So we'll get David and Lev on in a second. Then after them, we'll have Jesse Kaler from Elite Trading, and we're just going to spend the next hour after this just like ripping through charts. If you have a question about a stock, drop the ticker in the chat, and we'll just rip through them. We'll get thoughts. Any stock you want to look at, we will look at. I can't promise you we'll have anything good to say about it, but we'll look at it. What's the worst that can happen, right? So we will do that basically for the 1 to 2 o'clock hour. We'll wrap up the show at 2 o'clock, and the timing is precipitous because that's right when we're going to get the FOMC announcement. Don't forget, everyone, if you are trading today, the day is liable to turn on a dime depending on what happens in an hour and 12 minutes from now. What the Fed says regarding their tapering of buying bonds, of buying mortgage-backed securities. They're going to slow down their pace of buying. They're going to eventually stop. We just don't know when they're going to start the process. Is it going to be in December? Is it going to be in January? It's trying to it's like trying to turn the Titanic, right? It's just such a slow, drawn out process. But the market cares about that stuff. The market cares because this was the bazooka gun safety net that the Fed shot out of a cannon last March, right? Now we're talking about maybe slowing down the bazooka a little bit, the fire hose of money. That announcement could come today in an hour and 11 minutes. And
yeah, and Spencer, we talked about it on Monday as far as, how essentially all the big banks between Morgan Stanley, JP Morgan, were expecting this announcement to come this week.
Yeah.
So to my knowledge, I believe a lot of it's priced in, but like you said, there could be a surprise in terms of when that tapering is supposed to start. If it's earlier than expected, maybe the markets take a hit. If it's later than expected, the opposite of a hit. So we shall see this afternoon. I know all eyes are on the conclusion of that Fed meeting. We will definitely be covering here on Benzinga. So stay tuned if you are interested. And let us know in the chat kind of what you're trading, what you're looking at today.
We are watching the chat. Ben Lee, what do you want us to answer, man? Ben Lee, I see your question. He says we're not answering you. What do you want us to answer? We don't know. Ben Lee, if you're even a real person. Are you even a real person? How do I know you're real?
Yeah, I mean, I don't know. It seems like there's been a lot of problems with Truth Social. It seems like in the past couple of weeks, a lot of reports coming out.
All I know is I tried to get the app the day that the SPAC announcement, and I guess I pre-ordered it. I'm not quite sure how that works. I guess that's what happens when you get an app that's not public yet. Is it going to show up on my phone one day? Is that just how this works? Because I hit download and then nothing happened, so I don't quite know.
I don't know. I mean, we'll be watching out. We'll see when the app goes live. DWAC checking in on the SPAC that is partnering with Truth Social is down about 1% today, holding at $64.30. This is a stock that obviously went berserk a few weeks ago. Got well over $100 at one point. Now at $64. So we'll be watching DWAC as well. Spencer, while you've got Benzinga Pro up and we're waiting for the car parts, guys, I want to check in on a cannabis stock. Well, not a true cannabis stock, but one that I've said I liked in the space. That is Scott's Miracle Grow. SMG.
Why?
Scott's reported earnings last night and is taking off today, up about 12%. So essentially, if you're unfamiliar with the stock, Scott's Miracle Grow, of course, has their different soil products known for gardening and whatnot. But if you go to Scott's Miracle Grow's website, you can go under the brands they own, and they have a bunch of different brands that are targeting the cannabis industry. So, focused on the lights to help grow the cannabis, soil, of course, all this stuff. So to me, it's a play that gets you that multi-state operator. Obviously, Scott's Miracle Grow with the equipment can kind of be a Grow G competitor who Grow G has been touted as the Home Depot of cannabis.
Yeah, which I never got.
Because you can go there to buy essentially everything you would need to grow cannabis without having to go there to buy
But why can't Home Depot be the Home Depot of cannabis?
I agree. And I think Scott's Miracle Grow, the brands they have under are very compelling as well. All right. We are good with carparts.com. Give us a couple seconds and we will bring on Lev Peker and David Meniane, and we are going to go ahead with our AMA. So start spamming your questions in the chat.
Should I bring them on? Should I hit the button?
Yeah, hit the button,
Guys, thumbs up if you can hear me. Thumbs up. Let's do that.
They can hear us.
Dave and the Lev. Thumbs. Okay, they can hear us. Oh, man, we're going to do this. Third time's a charm. 3, 2, 1. Yes, we have them.
Yes,
What's up,
you
guys?
do. Yes, you do.
What's going on, guys? How you doing?
Good.
Great.
Lev Peker and David Meniane. David's been on the show a few times. I believe we've had Lev on as well. So welcome back, guys. How are y'all doing on this Wednesday?
We are doing great. How are you guys?
Good.
Can't
good.
Complain.
So for some of our audience that may not be familiar with carparts.com, can you guys just give us the quick, elevator pitch, 60 seconds, so we can get into these questions?
So I'll do it. So we're an online retailer specializing in auto parts. We sell collision, mechanical, performance, and accessories. And what makes us unique is that we have our own supply chain. We import straight from the factories in Asia and domestically. We bring all the inventory in our distribution centers, and we sell them directly to customers. So what that does is it allows us to sell premium quality parts at competitive prices.
Got it. All right. Well, give us a second because there is a slight delay.
Can we start? Because I have some questions.
Yeah. We'll start with Spencer's questions. And we'll get some from the chat.
Can we? Your own supply chain.
Yes.
Why do that? It seems like an obvious thing to do now, right? When there's supply chain chaos everywhere. But at the time, I'm sure that was not an obvious thing. There's a reason not everyone does it, right? So why do that at the outset?
Yeah, it's a great question, and it's an obvious thing for us, and it's been obvious since we joined the company 3 years ago. It's about controlling our own destiny. It's about vertical integration. In order to offer the best quality products at the best prices, you want to control the whole journey from factory to fulfillment centers straight to the customers. So no middleman, no third party. There's no one in between making a markup, and we can offer the same parts at great prices.
So it looks like we do have our first question coming in from Brian Baller. He's asking thoughts on Tesla taking over the car industry. And I'm going to add to that a little bit because I know Tesla famously has less car parts than other cars.
Yeah, so I'll take that one. So I think if you think about the car park today, there are 286 million vehicles on the road, and the average age of the vehicle is about 12 years. It's the oldest we've seen cars on the road to date. Yeah. And if you really think about how many cars Tesla is selling per quarter or per year, or whatever number you want to take, it's a very small percentage of the car park. So it's going to take a long time for not just Tesla, but all electric vehicles to penetrate the car park. But we have been getting ready. In January, we launched carparts.com/EV. We have over 700,000 applications and different parts for electric vehicles. We were also a launch partner for TRW and their Blue Line, which has brakes for electric vehicles. So we have been getting ready. And the other misconception is that Teslas have fewer parts. 90% of everything that we sell is really drivetrain agnostic. So, Tesla has bumper covers and mirrors and headlights and control arms and brakes. And sure, you have to replace brakes less frequently because of the way the car brakes on its own when you release the gas pedal, but it still has those parts.
Wait, just real fast. The average age of the car in the U.S., 12 years. How does that compare to historical averages?
It used to be, between 10 and 11, and it's been slowly climbing. So, we went from 10.6 maybe 10 years ago to 12 years this year.
Okay, moving on. So Easy Mike is asking, do you guys currently have any deals with the major automakers?
Yeah, go ahead.
I was going to say, what's up, Easy Mike, because I like the name. I think actually you bring up a good point, and what makes our business very unique is our private brands. 90% of what we sell is our own brand and our own product. So that's how we can have the same quality as the OEs, but at more attractive prices.
And we're also, early on in our journey, we decided that we wanted to reduce the paradox of choice for the consumer. So our goal is to offer the customer a good, better, best selection. And, if you think about an OE part, it's extremely expensive in most cases. There is really no catalog for OE parts. We create our own catalog, we write our own data. And so eventually we will offer consumer a choice to buy an OE part, but the aftermarket parts are just as good. And often they're sourced at the same factories as where OE make their parts as well.
Got it. And so Eduardo Gonzalez in the chat is asking, do you guys offer a lifetime warranty on your parts, or if any warranty at all, what's the duration of that?
Yeah, we're actually in the process of rolling out all new policies in terms of returns. We really want to be consumer-centric. And so over the next few months, what you'll see us roll out is hassle-free returns. So the first 90 days of you owning the product, you'll be able to return it to us, no questions asked. And then after that, there will be a lifetime replacement guarantee where, if you buy a set of brake pads, you'll be able to use those brake pads, and then in a year or 2 years, whenever they wear out, return them to us and buy a new set and get it for free.
I think Eduardo brings up a good topic, and if you look at some of the specialty retailers that are doing really well right now, whether it's Chewy or Warby Parker, some of the online players, their return policy and their warranty policies is what also makes them very unique. So that's one of the things that we're looking to match and improve on over the next few quarters.
Got it. Yeah, that's interesting. Someone else is asking a good question in the chat. Rich Kaiser is asking,
that's a great. I saw this one. This is a great question.
How far back in years do your parts go for the people who have classics? I mean, we're up here in Detroit, Michigan, so a lot of people out here are driving cars, from the just classic cars, really.
From before you were born.
So we go back to about 1980. We are in the process of expanding our assortment and identifying gaps in our catalog. And so classic and restoration is definitely one of the areas that we want to pay attention to. So you'll see us kind of our catalog to the vehicles, and go back to the 1950s, 60s, 70s as we kind of attack new areas and get into new parts.
And there's another good one here I wanted to get to from the chat that I just saw. And I want to, yeah, okay. This is going from Bread Goddess. I don't think we asked this one, right? Do you work with individuals or companies? Is there any you can name?
So we primarily ship to individual consumers. Now, from our research, we do know that 1 in 6 customers takes the parts to be installed or replaced somewhere else. They don't do the repair themselves. And we're also working on a lot of different initiatives to address the do-it-for-me market. But today, our primary focus is do-it-yourself individual consumer.
Here's one from Christian. How has your supply chain slowed? This is the obvious one, right? You have your own supply chain. Well, surely it's affected, right? So how has your supply chain slowed down and been affected over the last year and a half?
You know, I think every retailer has felt some impact of supply chain disruption. You know, for us, it's an obstacle, and we looked at it as an opportunity. So very early on in the pandemic, we decided to take a more aggressive approach. So we continued expanding our supply chain by opening new buildings. We continued to pay, you know, premium rates for ocean freight to have the inventory. We like to say that inventory is our oxygen. And so the fulfillment centers is really the key and the critical component of the company. So we've been very aggressive in terms of bringing in inventory. And in fact, and we just announced it yesterday on our earnings call, we're at basically a company record in terms of inventory position. We have $130 million of inventory position on the books. That's up from 49 million 2 years ago. And as we get into our peak season, having the inventory in stock is what's going to make us win.
132 million.
The extra 2 million actually counts. So
it makes a difference.
What about foreign cars? You guys are also in those markets. You're in all car markets, right?
Yes. So all foreign, domestic, 1980 and above for now. But we carry it collision, mechanical. We carry it all.
All right. This isn't asking me anything. This question I highly doubt you can answer. But somebody did ask about your take, I think, on flying cars. I think. Hey, this is what we polled the chat for questions, and this is what they say. Let me find the exact question because I don't want to butcher it. Yeah. Okay. This is the question. Will Tesla produce a flying car in the future like the ones in the Blade Runner movie? Well, I doubt they can speak to Tesla specifically, but I'll let you guys answer that as best you can.
I hope so. And, you know, if it falls out of the sky, there's going to be more parts to replace on it.
And I'll tell you, for me, I'm still waiting for a flying DeLorean.
Yeah. Those are supposed to be out by now, I thought.
This isn't from the chat, but I'm just curious. Right now, what brand is the most bought, brand of car parts on your website right now?
Meaning for which brand of cars or which brand?
Yeah, for which brand of car? I know it's carparts.com branded parts, but are they for Toyotas, for Volkswagens, etc.?
It really follows vehicles in operation. So it's, the number one selling vehicle in America is a Ford F-150. So a Ford F-150 is the most common vehicle that we sell parts for.
And I'll give you the other ones. It's a Dodge Ram, Chevy Silverado, and Toyota Tundra. The main,
sounds like
yes,
trucks, man.
All pickup trucks, yes.
So logistically, so I go to a mechanic. They, typically would say, oh, we have to order these parts, and there's going to be a markup for those parts. So if I went to a mechanic and knew which parts I need and then went and got them myself from carparts.com, could I bring those to the mechanic and then have them install those, or do the mechanics themselves have to order from carparts.com?
Yeah, so we've seen the tide kind of change. If you would have asked me 10 years ago, I would have told you that, most mechanics wouldn't take the parts that you sourced outside. But I think as kind of time went on, a lot of mechanics, they kind of work like lawyers or doctors where, they have a certain amount of money they want to make per hour. And so if you were to go out and source your own product and then bring it into a mechanic, he might have free time and he may install the part. He might charge you a little bit more for labor. So, if a typical labor rate is $110 per hour, he might charge you $135 just to make a little bit more per hour because he's forgiving the extra profit on the part. But a lot of mechanics will do the repair if you bring in the parts.
And then just to wrap it up here, there was a question about warehouse automation. Can you speak to that a little bit? Is that something you're investing in or not really?
Yeah, automation is a word that gets thrown out a lot. There's different types of automation. For us, it's all about customer experience and optimizing click to delivery. And what that means is when a customer places an order, we want to ship it out as quickly as possible. Now, there's different ways. There's different types of automations. There's conveyors. There's AMR. So we're always looking at different ways to optimize the warehouse. Ultimately, we have 1,000 people on our team in our DCs. It's the heart of the company. It's the people that make this company run and allow us to be here today, frankly. So that's never going away. Are there opportunities to be a little more efficient long-term? Absolutely. In the short term, I think we're doing pretty well investing in our own people, especially in this environment.
All right. There's actually a couple more here. Someone asked about Berkshire Grey, BGRY. I just put the chart up there. Is that a company you're looking at for order fulfillment?
So actually, no. What we're looking at right now is building up our own capabilities internally. I don't like to say it in public, but it's kind of true. We're control freaks. And what that means is we want to control our own destiny. So a lot of the tools and technology that we use and how we leverage data is all built internally with our own teams.
All right. And then last one here from Christian Gallagher. Do you offer free shipping and how long is your delivery time?
So right now, typically what we're aiming for is 2 to 3 days delivery. And that's why it's really important for us to get closer and closer to the customer, because what we're trying to achieve is 80% of the country in 1 day. And we're also trying to achieve getting the package out of our distribution center same day. So if you think about placing an order on a Monday and getting your part on a Tuesday, that's where the competitive advantage really comes in for us. So that's why it's such a big focus on opening more and more distribution centers, getting closer and closer to the consumer so we can fulfill orders really quick. In terms of free shipping, a lot of our parts have free shipping, some don't. It's kind of, free shipping is kind of a weird thing in the industry, in e-commerce, because ultimately the consumer pays for it. It's just baked into the price. So we kind of go the transparent route. We just show you, hey, this is what we pay for shipping, and we're passing those savings on to the consumer as well.
All right, David Meniane. I think that was all we had. I think we got to all the questions. I'm 99% sure we got to all the questions in the chat. So, David, Lev, carparts.com, the CEO and the COO, Lev, Peker, and David Meniane. Guys, a pleasure as always, and good luck. Congrats on the quarter you just had, and good luck going forward.
Thanks so much, guys.
Thanks for having us, and PRTS to the moon.
Oh man, wow, going out with a bang on that one.
Spencer, you might not have been on PowerHour with us the past couple times David comes on, but he always gives us a good car parts to the moon. So
no, I was not on.
Gotta love him for that. Yeah. So yeah, I mean, I personally, I'm not a huge car mechanic guy. I don't like change my own oil or anything, but ever since we've gotten the chance to speak with David and Lev, I've toyed around on the website, and it is very easy to find parts. Comes up very quickly. I mean, it seems like a very disruptive company in that space.
Back in my day, we had to go to the mechanic and ask for the parts there. Now they get delivered.
That's why I asked the part about the if you go to the mechanic, because I know they like to, say, oh, we got to order these parts and charge you for the parts. And I'm sure there's a markup and upscale there for what they're charging you. So mechanics.
All right. Anyway. Hey, let's bring on our last guest of the day. And we're in hour 2 of the show. This is the more relaxed hour. Let everyone just chill. Lean back a little bit, pull up some charts, and we're going to rip through some charts here with Jesse Kaler. Let's get Jesse on the show right now. Hey, man, how we doing here?
Hey, how's it going, guys? Thanks for having me back. I seem to have some good interviews today. Phunware was an interesting one.
You can say that. It was interesting. It definitely was interesting. I'm always interested in stocks like that because they have tremendous retail interest, and you either love them or you hate them, and there's no middle ground. But what is on your radar today, man? What stocks are you? We'll pull up your charts here in a second, but what stocks are you watching today?
So today was a day of pretty much rejoicing on the good trades that we had throughout the week, and last week kind of a lot of swings came into play that we'd been watching. So it was more of a takeoff today. I kind of just pulled some out. I did actually buy a little bit of Phunware for fun and averaged down a little bit on that one and took some profit out. I got in that lower $4 area and got out around $5. And I was like, you know what, this was a nice little run real fast, get in and out. So it was kind of fun on that one, no pun intended. But the big one was the Foot Locker call out that I had with you guys 2 weeks ago when we were on here talking.
I remember that. I wrote that down. I don't have the paper, but I wrote that down 2 weeks ago.
We said, hey, we're in the 47s. We're looking for that target of $50 within the next 2 weeks, and we're at $50.83. So got out at the $50, and it was actually at $49.83 to be exact. But we got out a little early, and that's how we like to make it happen usually. And
awesome.
This is exactly what we had pulled up pretty much for you. Where we were saying, hey, look at all these nice support areas coming in, and then it actually gave us a nice pull the day after or 2 days after we spoke, and then it ran back down. I was like, oh, maybe I spoke too soon, Spencer. I was in the chat kind of messing with you one day. I was like, hey, I called out Foot Locker. Then like a couple minutes later, I was like, oh, maybe I was a little too early. And it found that support level right here again, and it didn't take it out and come back and break a new low. And then that's when it just kind of, it was easy peasy after that, up to 50.
Hey, AB, just make sure you see Occupy Investing's comment. Can we get Berkshire Gray, BGRY on the show? I think we can Occupy Investing. I think we can.
BGRY. Let me write it down on my trusty dusty legal pad here. BGRY.
We will reach out, Occupy Investing. We will do our best to get them on the show, and we will tell you when that happens. But you'll have to tune in. Okay.
All right, so
what else are we watching here, Jesse? Do you care about the Fed at 2 o'clock? Or are you not about that life?
Well, I would if I wasn't a hedged position. I put myself in hedge positions, and I make sure that I'm protected. And when I took off some of my risks today, I also added, which I was going to talk about because we don't always talk options together, but I did buy some puts to protect myself in the money puts on QQQ today. And I'm going to probably carry them as protection for now. I think that if we get a pullback, then I'll take some profit on them.
Okay.
I was surprised that we were up again based off of some of the stocks that I was watching and looking at Facebook, Apple, looking at all the tech stocks. I was kind of surprised that we're hanging on the way we are. And then I look back again and we're up again. We're green. And then I'm like, okay, well, I'm just going to wait till the end of the day kind of thing. And I'll add some options when they have a big price jump to the upside to take some of that implied volatility that comes off the table, basically, when they feel like, the way I say it, they, but really it's just whoever's writing the options. And whenever that value goes into play, you can look at something that's $300 and then you get a 6% jump into stock really fast on a short time frame, then it's going to just crush some of that premium for you. And a lot of times you can just find those good entries like that and then just kind of find them throughout the day if you're looking to build a position for a swing position. I like to, if I pick a day or two, I'll say, okay, today I'm going to buy maybe one or two at points of interest, and then tomorrow I'll buy a couple more, things like that, and add on until I feel like I got my position where I want it to be. Yeah,
that's a great point you made about the market being up. We've said this now for months, but every day I'm reminded of another stock that has just been absolutely brutalized. It made a high in February, and it's been crushed since then. And I know that there's like 100 stocks that are making new 52-week highs today, but how many stocks make new 52-week lows today? Like 500?
Right.
I mean, like it's crazy. Maybe more than that. Like it's pretty crazy. Like I look at Activision, like crushed. I look at Zillow, crushed. Right? Chegg, crushed. We're at all-time highs on the broad market, and we can thank Tesla, we can thank Apple, Microsoft, right? The big guns. But there's just so much dichotomy out there. There's so many people that are underwater in so many stocks, or people like me that watched huge run-ups last year, didn't sell, and now are basically back to scratching a lot of stuff.
I follow you guys. I'm always with you in the chat, and I think I have a good grasp on what you own, Spencer. I think, in my opinion, so I've seen where you've at. You're pretty honest about where your positions are on a lot of things.
I'll show you what I own right now. I have a watch list, or I'll show you what I own. Yeah, it's nothing too exciting, but I'll bring it up on the screen if you're interested. So yeah,
and you'll be so excited, like you'll be like, yes, I'm like you're not, but like the group is. We're like, look, you're Spencer, great call, and you're like, yeah, it was great if I sold about 3 days ago or a week ago or a month ago.
Yeah.
And especially with SoFi, and you've been on a roller coaster ride with that one.
Yeah, the SoFi one is tough, right? It's tough because it's like it's a retail stock. Retail loves it. I believe in the company, but I confess not to know why it does what it does. I guess not that I should know, but yeah, it's a de-SPAC that they've got all these things working against it, but I believe in the company, and if I really am not full of crap, then I should really just be quiet and let it sit for a while, which I'm trying to do.
I hear it. I mean, it's not one of those things where, okay, I only listen to Benzinga. I'm only on your channel. I listen to so many different outlets. I have my own, I have my own Discord where we have our own information, our own news, the top stories that come in, and we also use Pro. So it's not only you. There's a lot of different names, big names, and just even smaller groups that are speaking about SoFi. It's not just like a name that's been like, oh, this might be a meme stock. I think it's actually, when you look at the fundamentals, you look at what the company is going to be doing and kind of where your thoughts of where they might grow in, what they could grow into. I mean, they're a part of them as everything, it seems like now. But I think it's a good one for long run. I'm not invested in them whatsoever. So I have traded them multiple times, but I don't have anything in them right now. Same with Foot Locker. I'm out of that one. I did see in the group they were mentioning SNDL, and I'll touch base on this one just because I've actually been watching it because I like to monitor like Webull and some of the other like Wall Street bets. We have, you can just put in there a quick command and see what the top most popular stocks are. And this one's been on like every list for I would say 2 years now, a year and a half. And they just can't seem to win. It's one of those ones where they get a little bit of momentum. They seem like it's the pot stocks might come back, and this one just always has just been the laggard. It's been the beaten up one of the bunch, and you can almost say that about the whole sector, in my opinion, that it's been a hard investment for a lot of people. And when I look at this chart, though, technically, if I said, hey, I've never traded SNDL, I've never in my life looked at this, I don't know anything about the company, but I want to know if it's a good time to buy it. Well, in my opinion, there's 16 cents right here. Just that's the first thing I see is that, okay, there's a possibility that this stock could go to zero. For one, it's under $1. That's the first thing that comes into my mind. It doesn't go, oh, it could go to $1 or $1.50 or $2 or $2.53, $3.54. That's not what I'm doing as a trader. I'm not looking at this space above at this moment when I first come into trade. What I'm looking at is where is it touching? Where are the people saying, you know what, we're not going to let it get any lower than this? Well, it's squeezing and consolidating really tightly down here at the 65. But the last move was a downside move. So in my opinion, the way I would trade this is I'm looking for, okay, from this mark right here, and I'll put a line here, is that just for whoever put that question. This is where I'm looking at, $1.49. I would be a millionaire in my opinion if I hit this level. The 149, that is a great jump in a 65-cent stock. And how, in my opinion, where would I want to go to be safe and say, hey, I can take some profit for anyone that's looking to get to that level? Where I'm going to look for is a spot about 40 to 50% between that level. And if you're looking to get into a position like this, in my opinion, obviously don't take this as stock advice. It's all just information, obviously, but you've got a clear level right here. My out would be right underneath this previous low. So I'd put it about 58 cents, 59 cents. And then I'm looking to only gain from this previous move. So now we're forgetting about this big one. We're looking at this one to here. We're only trying to gain here, 73 cents. So is the risk profile good enough for us to take the trade? Then you'd put this right here. You pull this down. It brings up your target. And to me, it just doesn't look like it's going to be enough meat on the bones for me as a trader. Now, if you're trading 10,000 shares and you somehow get filled and get out of that trade, then you're really lucky, and you tapered out of it. You sold 100 at a time, a few hundred at a time, maybe 1,000 at a time, things like that. But just when you look at that, there doesn't look like enough meat on the bones per se. There's not enough. There's not a big enough ratio for
you
loss
to be
of profit.
interested. Yeah, I got it. Yeah,
and that's just where I'm trying to tell these people. A lot of people, you see them in the group, they're hoping for these, and I call it the hopium stocks.
Mm-hmm.
And they're not going to make. It's just like you say, you're not going to make millions by buying out of the money calls for weeklies and monthly, options.
Well, though.
Depending on who you are. Well, if you pick the one stock or the 12 stocks out of the 2,000.
Well, that's the thing. Is like somebody bought the 260 calls in Avis and made a lot of money yesterday. Yeah. And I don't like. You can't knock it because I almost think we talk about hopium, hopium trade, never selling a loser, just hoping that it comes back. I mean, the more it happens, and it's happened a lot, right? It's happened a lot in this market. You've gotten second and third chances. The more it happens, the more you're like, look, you gotta just. It is what it is. It's not really a correct way, but the correct way is whatever allows you to either make money or get your money back at the least, right? And it's worked. I don't know why, but holding and waiting in a lot, not everything, but in a lot has worked. That's just the way it is right now. And we can scream till we're blue in the face. Don't hold your losers. Sell your losers. Sell your losers. I mean, the more every time we get a stock like it makes a comeback, I think, well, all right, that's another one. I don't know, man. The textbook says one thing, real life says something else. So.
Well, that's where you can diversify. Have a couple bucks in there for fun. If you really like a company and you think that there's a catalyst in the future that they could rise, and you're like, you know what? Then, my opinion, then you wait for a really, really bad red week or something like that. You want to wait for it to take a week of red, 5 red days, and you're like, okay, man, this thing's just been beaten down. It's down 23%. Maybe that's when you take a shot at a long-term call, because that's what you're going to have a lot of that premium taken out of it. It's just what I see is people buying them when they're up 30%, 50%, 100%. And now the premium went from 100 to 2,000, and you're paying $2,000 for a call that you could have bought for $100 yesterday. And the non-educated trader, I don't think that they're looking at that. They're not going, oh man, I could have bought that for $100 yesterday and had 10 of these things for what I'm paying for one.
The other thing, and the other thing also is I try, because I've been underwater bad, in some stocks, and if I really am convicted, then I just don't look at it.
Yeah.
Then I honestly I don't even think about it. Maybe this is just me. I have unique ability to pretend my problems don't exist, but you just pretend it doesn't exist. Just forget it. Just stick it in a drawer. If you're in Sundial from 8 months ago, or whenever that run happened. Just stick it in a drawer. I mean, if you're that convicted, right?
Right.
I mean, sometimes that's what it takes.
So we talked earlier about the stay-at-home trades are pretty much dead. That's kind of what pre-market prep was going over. And
that was like the theory of the morning. I don't know if it persisted today, but that was the theory of the morning.
Well, I've kind of been agreeing. That's why I liked Foot Locker so much, because I said, this is a stay-at-home and a reopening play. In my opinion, you're always going to have to buy shoes, regardless if you're doing yard work or going to work, or now kids are going back to school. If we all get, we have this hyper vaccination happen, and everyone's feels like we're good, herd immunity goes in effect, and everyone's back out hanging out doing all their things. Well, it's kind of already happening, in my opinion. I don't see a big difference in my life as of right now, and I don't think that our children are going to get forced to be staying at home again, just because of the fact that they were just so far behind the kids coming back to school that were staying home. So I think that these plays are going to be more and more on my radar, looking into what do we need necessity wise every day? What are our children using? What are we spending our money now? I know we were spending it a year ago. I know that a lot of people were hoarding their money. They were going out to the grocery store thinking that we were going to have the last steak you ever had in your life. And, that's where people were worried about. Now things are going back to normal. I think there was a lot of profit taking in the stock market, and there was a lot of people that woke up and looked that did what you did and hadn't looked at their stocks in 10 years and took profit. But I also think, my grandfather's one of them where he sold a lot during the pandemic and never rebought. And, he's regretting it
that
badly.
Yes. That is like a great fear that I have, is for people get raked over the coals, lose their shirt, sell, which is okay, and then never buy back in. That's why we talk about diversifying all the time. I feel terrible for the people that sold in 2001, 2002, or 2008, 2009, and they missed the best decade that we've ever had for stocks. I hope that that is an overarching lesson here. Is generally speaking, the stock market does go higher.
And the saddest part is he said every time there's been one, like 09, 08, he was like, I always bought more. And he said this time, he's like, I just didn't buy the dip. And I'm like, man, I'm like, Grandpa, in your lifetime, you've only seen a few of these. And if you have that big money there, you got your 60 years of retirement from GE. You've got, unfortunately, that's the company he had to retire from because they did not take care of their employees with their stock. But at the end of the day, he had a good chunk of money there. And he's like, he had AMD, in the teens. And, still sold for a profit. But, I mean, he's looking at it going over 100 and he's ever pulling his hair out, And
yeah. Hey, I've got a family friend that retired February of last year or January of last year. And then I felt like so bad for the guy. He just watched a quarter of his portfolio go up in smoke. Now, when he needs it, right now he's retired, he needs to live off his investments, and he lost a quarter of it in like a month, and then it came right back. But we had no way of knowing that was going to happen. And for people like that, people who need the money, please stay invested. Please.
Shelly said, I always snack on PowerHour. Y'all need to get snack sponsors. So Frito-Lay, hit us up.
We can do that. We can get, I hear Body Armor is big right now. It's got a lot of money from Coke. So maybe we get Body Armor. We can get some, maybe try Celsius. We can try some stuff. We can try to get some snack sponsors on this show. Hey, let's do some questions from the chat. A few people were asking, let me go scroll up here because I lost it now, but a few people were asking about, here's another one, just like the Sundial thing is BBIG. I mean, it's sort of the same. It's the same story, right? It's sort of, it's basically the same chart. This company, they've been on the show, they've been on the channel. I don't quite understand it, but it's got this following. For whatever reason, if anyone wants to explain to me why certain stocks have this following and certain stocks don't, I would love to hear it. But it's got this cult-like following behind it, and I mean the chart, looks the same in that it's well off its highs. So I know that Zach Morris was big on it. I don't know if he still is. Maybe that's part of the problem here.
Belding's favorite pain in the butt.
What?
Sorry. The show Saved by the Bell. The principal's
name
is Belding.
Yeah.
Zach Morris,
that's
sorry.
That's the guy.
I'm showing my age. I'll be 36 this year.
I have a great Mr. Belding impression, actually.
Do it.
It's here, take it off the screen. Let's go. It's hey, what is going on here? Is that good? You like that?
That was good.
Thank you.
Okay, back to his fun side, everybody. You guys don't get to see this very often. No.
back to BBIG.
So looking at this one, I mean, I always pull up things technically. I don't know anything about the company. I know it was all over the radar for stock. I like to look in the morning. I even put in the chat a lot. Pre-market gainers, pre-market losers. This one was on the board like every day for like a month. But you can see that it's significantly fallen off here. And at this point, I think it's at a crucial level that says, okay, I'm going to come back and give somebody a few bucks back and get you back to 584. If you're holding on to this thing, 584 would be a level that I'd be 550 probably would be like, hey, I'm out of here. I'm buying more now if I really want to hold on to it with a really tight stop loss right here. And then you're hoping for yourself to get a 50% retracement on this previous move here. It'll probably consolidate in a lane right in this area. And then it'll probably open up and break out for about 20 minutes of the day while you're sitting at work and not paying attention. And then you're going to be like, man, I could have sold at $6 and got $2 back, or $5 and got $1 back. But this is where you set your trading plan, and you can set it just like this and say, okay, I want to get out, and you can have multiple targets. You can say, I want to get out some here, 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 and you can set those and just walk away from it, kind of thing, in my opinion, on this one, if you're really involved in it. But if not, you put an order right here and let them fill you one day if you get lucky on a bad day and they drop 50%, because that's about the only thing I can see on this one.
Ooh, who was this in the chat just now? I want to call him. Someone is doing some arbitrage here on ticker FAT, Fat Brands. Oh, I just lost the comment in the chat. Where was it? Fat and SWW17033 is I think is arbing Fat and Fat BB right now. I don't quite know what's going on here. I know they're both low floaters, not very liquid. But they're both spiking right now. So what I know, I think they report tonight. I think Fat reports earnings tonight. No, tomorrow. Sorry, tomorrow after the close.
What did Fat Brands do?
Well, I don't have to know. I can just look at the Benzinga Pro. They are a restaurant. Oh yeah, I think I knew that. Yeah, they own. They own. Let's see. They own Johnny Rockets. They own Fat Burger. They own Elevation Burger. Hurricane Grill and Wings, Bonanza Steakhouses. I've never heard of any of these. I've just heard of Johnny Rockets, but yeah, restaurant stock spiking right now.
So when I see restaurants, I always go to this one, DRI, Darden, because they own a lot of restaurants that I'm actually familiar with in my area in the Midwest. And I've actually been watching this one because they've been kind of consolidating in this range, and I've been watching for them to dip all the way back down to 100 is what I've been watching. But you said Fat. That one's ripping. It's not affecting them at all. So
yeah, Fat is the liquid one. FATBB is not liquid for Jack, and I think it's just moving the market dynamics here. I mean, it's got a float of 500,000 shares, so it's not.
They said you had me at Johnny Rockets. I've never even been to a Johnny Rockets.
I haven't been to one in 15 years.
What is it? Is it like a sub place or something?
It's a 50s diner style place.
Highway 55 kind of place.
Yeah, exactly.
So 854 to 1259, you're hanging out right in that area where it's like, okay, you got people buying and selling right now. So let me go to the smaller time frame just to see if oh wow, I don't anything that looks like this on when I'm trading on a smaller level. I just don't like it. It looks like a bunch of to me.
All right. What about here? Here's one I'm not familiar with. Azul, from Daniel Ryan, ticker AZUL. Says, I'll bring your comment up. Bought it yesterday. Now they want to buy bankrupt airline. Oh, those are a dime a dozen. AZUL up 4.5% today. And Daniel Ryan is long from, I'm assuming, somewhere in the 13s. So.
I'm taking profit and maybe looking to re-enter if you really like it right around this area, 1444. That's just how I would trade it. I'd look for it to try to come back down and retest this low. And if it doesn't retest it, it'll probably at least hit this 1440 level. And I'd like to re-enter around there and then have a stop loss below this if I'm down. If I'm getting in here, I'm out once it breaks past this previous green candle. So I'll tighten this up on a 15-minute. If you're trading this, now, like a now trade, then if I'm looking at it like this, okay, we get a nice run. That's when I'm paying attention to the stock. It starts to not make any more new highs, and then it flushes down. And when it gives you this back right here, that's where I'm out in my opinion. And then if it comes back here and retests this area and then starts to come back up, then in this channel here, then that's when you're like, okay, I can go back long again. Because I like to take my risk off instantly. As soon as I feel, and I'm a feeling person, I like to watch the trade and I see it and I'm just, looking at it the way that the price action is moving. And once I start breaking back down, I don't want to be the guy that's trying to catch the falling knife once it breaks past this 1388 low and continues back to right where I got in again. I don't want to lose all my profit. But some people would say, okay, I'm in here, and then you're looking for maybe a price target of 15. Well, if you just set it, then you're going to hit it. But me, if I'm watching it, then I would have already been out on this play, honestly, and I probably would have maybe re-entered if I was really long once it didn't make that new low. And then now you're just kind of hanging out with a lot of profit. So it's kind of, I don't know, it's up to you on what your trading risk reward is.
I'm just keeping an eye on the SPY here, and we are just so quiet, so nothing's happening into the Fed announcement. Nothing is happening. It is so quiet out there in the broad overall market as we wait whatever the Fed's going to say at 2 o'clock here. Okay, let's do some more from the chat here. Drop your tickers in. Here's one, Tattooed Chef, TTCF. This one comes across my radar every couple of days. It seems like somebody asks about this. I tell you what, I really I've been seeing more and more of these types of products in the stores, but they're not Tattooed Chef brand. I see every other brand. Maybe it's just a store that I shop
like
at.
Tupperware stuff. Is that what it is? Or like you mean like
it's like
cookingware?
It's like Beyond Meat.
Oh, okay.
Yeah.
I'm a go to the butcher kind of guy.
Yeah. Oh yeah.
I like the fresh meats.
Yeah.
So I like to go to the daily. I'm going to break it just to put up some levels that I had there, just to kind of give me a reference once I get to the smaller levels and see where I've missed out on a play. See, I kind of was a little off on that, but it looks like this area right in here is where the buyers are coming in, getting you some love in this $18 range, and you see it just blasted off from there already. So I feel like I've already missed out on this trade if it's just a trade, but for long-term wise, you'd want to come back out here and see where your next yes. I mean, it made a higher high, but it also made a lower low on this move. Unless you could, it broke past this one, but I guess it's kind of a double bottom, but this looks, like it might want to take off again up into hit 20. $20.
20. We haven't seen 20 on that in
a long time.
Yeah. Let me pull my daily here. Yeah. I haven't seen 20 since September. No. Yeah, September.
It's really got to hang out and hold this $18 range. If it can hold and stay above 1867, right where it's like in this area right now, if it could just stay here and close, open up tomorrow closer to 19, I think that you might get that nice little run up to 20, but it might be really short-lived.
All right. Let's look.
Maybe people are worried about. Maybe they're thinking Christmas, that people are buying this stuff for Christmas.
Yeah. Okay. Treasured. No, not treasured. Sorry. Who asked? Sean asked about a stock that is like not trading. Like LRNT has like no trade, so I don't really think we can look at that. What about
Kroger? Someone said.
Yeah, I saw Kroger. What's it doing today? I haven't looked at Kroger since the open. How are we doing since the open?
Blew up today. For Kroger, anyway. 42.40. Yeah.
This is ridiculous. This is because of the Bed Bath & Beyond thing. This is so dumb.
Everybody's buying Campbell's soup. No.
This is so dumb. Oh, sorry, Sean. All right, we'll get to that in 1 second. Yeah, this Kroger thing is so dumb.
Well, you see your double bottom, and then you see where they sold it off from this top up here. I mean, you're looking at it almost exactly a 50% retracement if you see that there.
Yeah.
And I go over. I know you probably see me do this a lot, where I show the top, I show a bottom, and then it's like right when we're talking about it, it's always hanging out right here in that 50% range. That's when it gets on everyone's radar.
Yeah, this move is probably
short-lived down to 40.
Yeah. Yes, I don't have a crystal ball, but I mean. Because I try to think about like the characteristics, like the types of companies that capture the attention. GameStop, right? Traditional video game mall retailer. AMC, traditional movie theater, right? Avis, traditional car rentals. Kroger sort of fits that, but it's also like just a grocery store. It's like there's nothing existential. There's no existential threats to their business. There's no. This is not a rally behind Kroger type of situation. This is still going to be short lived. I think I would not buy it up at 42.50. Absolutely not. If it were me. Okay, the one from Sean was IronNet, IRNT.
Ooh, I like this one as just a talking point, because this thing was along the lines of GREE, GREE. If you saw that, this is like in that same moment.
Ooh, yeah.
And this is just what happens. People coming in, they're waking up in the morning and they're like, you know what, this thing's on the radar. It's up $40, and then it pulls back and they're like, oh, okay, I'm going to try to get in and take a shot. And then it just looks like shot, and it just goes down and down and down. That's when they go, hey, what about this stock? Now, if you're just now the first person ever look at it and you're like, okay, this is what I want to look at. What's going on right now? Then it looks like it's trying to pull back and give you, it's trying to say we're a little oversold down here at $11, $10. But then I'd have to go in and look at the fundamentals, see what this company's doing. I think they're a web protection type of company, like I don't know exactly, but I think
it reminds me of Iron Dome. That's all. It reminds me of the Iron Dome in Israel. Is what I think of when I hear this company.
But I mean, you got to support 1178, 1165 right now. Current support. $10 is your downside.
Yeah, and the chat is right. It's other grocery stores too. It's not just Kroger, but yeah. Anyway, IronNet. IronNet is interesting because it is like it does have a lot of retail interest, but I don't really know. I was gonna say the chart doesn't act like it, but
so is there big money out there? Here's my conspiracy theory: is there big money? Are there hedge funds and algorithms that are saying, okay, we're going to take all the top stocks on Wall Street bets, retail trading platforms, and we're going to short them? Because it seems like a lot of these stocks, as soon as it goes on that list, it goes way down.
Well, maybe it's the kind of stock that gets on that list in the first place.
Yes, it makes it easy for them to make that decision.
No. I'm saying maybe the kinds of stocks that are on that list are just shitty stocks to begin with.
Yes,
and are just getting the pump, an undeserved pump, right?
Yes, undeserved pumps are maybe. Is there an undeserved pump algorithm? I need to know where that one is, because someone needs to build that for us.
I mean, yeah,
we need stocks that have
certain people on Discord, and Twitter probably.
We need a bad PE scanner with bad fundamentals. And over exuberated
old school business model, like car rentals or movie theaters or video game stores, and yes,
it's Grandpa's stock. So we got Grandpa, what did you invest in 50 years ago? I'm gonna write that down, and those are the ones that are winning right now.
Yeah, honestly.
PG, Procter Gamble, that's one that was on the list for when I was a kid. That's what I knew of. Banks, I mean, PG doesn't look too bad.
What's another one?
BAC.
How's IBM doing?
IBM.
Grandpa's stock. It was IBM.
Ugh, not good. It's holding at 126 level, 124, but
not yet. Yet it's not doing good. Maybe. I don't know.
This could be one that gets on the meme stocks and if it sits down here too long.
Yeah, there is some retail. The JN Macy's is making a new high again. I think
Macy's, yeah.
Macy's is a monster. Dillard's is a low floater, so that's sort of the
chat is pulling out the nostalgia stocks right now. They like this one. They like this idea.
Enron might actually. I don't know this for sure, but Enron might actually still technically have a ticker.
Well, I was gonna say, what is Enron's ticker?
Well, it would be on like the gray market, which is like the totally unregulated, like ghost shell companies that only exist on paper.
Wild West trading.
That you can't even trade. You can't even get a quote or buy them. But these things do trade. Like for Whitney Tilson, who was a hedge fund manager, wrote a post a few years ago about he was short Lehman Brothers, and he didn't cover his short for like 8 years, like long after the takeover. by I think it was JP Morgan, right? Or that may have been Bear Stearns. I don't remember who. But Lehman went under, and this guy was short for years and didn't cover for years. And he wrote about, like, I don't know why he just didn't. And wrote about like what a pain in the ass it was for him to like cover his short like 6 years after the fact. So you can some of these things you can still find a ticker, although they may not quote publicly or really even trade, but if you have certain tools at your disposal or institution, you maybe can do that. But Rite Aid, Di wants to know Rite Aid, yeah, it's a good one. I saw somebody mention Charge Point earlier. Gesundheit, Aaron Bree. Microsoft does not count, unfortunately, because Microsoft owns the cloud, right? So wouldn't call that a Piggly Wiggly.
Rite Aid is like a pharmacy play, I guess. Like
Hex is throwing out the Piggly Wiggly reference. Wow, Hex really pulling that one, going deep into
Johnny's Toys. Are we going there?
Into the well for that one. Here's one. I don't know if I know.
Interesting enough to throw it out there. I did have a line that I guess I've drawn at some point when someone asked me about Rite Aid at $15.08, and it's literally like right there today. So
nice.
I don't know. That's kind of weird. And I looked at the stock from overall. It's just been nothing but a bad investment. But this thing was there must have been some crazy splits or something, but it was $200 stock and $900 at one point.
What about Chico's? This one, CHS. Let's pull that one up. CHS from, who just dropped that on there? From Bread Goddess.
$5.99. $5.99. That's less than a combo meal at McDonald's.
Anything else?
I'm looking at it here. CHS. What do they do? Chico's.
Yeah, shoes, right?
Shoes. Never heard of them. Well, on this chart, it looks like your bottom. You got a double bottom happening on a monthly chart. I mean, it just hit a really, really old low all the way from 2013. I can't see because my computer's in the way, but let's see. And then bounced off. So, it's like my Foot Locker play, I guess. If it's a shoe company, I mean, I don't know much about them. I'd have to research. You just filled a huge gap that was just a bloodbath that happened to some people from $6 down to $4.84. So anybody that was in the stock right here is really happy right now taking their profit off. So you have a hard range to get through. You'd have to bust through that 650 to try to get anywhere higher. So you have to come back to this old previous double top here. I'd say that you're on your way to 650 to try it out is what they're doing now.
Speaking of grandpa companies, Mattel, yeah, it's like another good one.
I tried to play this like a year ago, and I got smacked. This one took me out. I definitely hit my stop loss on this one. But
that's good.
Yeah, it's nothing but gone down since then, has it? Yeah, well. Yeah, I think I was up here in the 22, 23s in this area, and I was doing really well with it, and then it just came right back, and I got out probably with just a little bit of a loss there. I like to set my like once I'm in the profit, like in this area here, I would say, okay, I'm just going to put my stop at break even is usually where a little above, just to say, okay, I still made a little bit, but man, this one. It's coming back, 50% retracement. Look, there's your top. Here's your bottom from that huge move down. It broke down from this top to here. It came back and broke out of this range at the 19. You're at $21 hanging out there. People are getting excited for maybe a little Christmas run possibly, but I don't know. My kids, I have 2, 3, and 11 or 12, and I don't think we have anything Mattel in our house at this point.
You have
anymore.
Nothing physical. It's all digital.
It's
tablets.
You have
the device. Yeah, that's it.
Learning devices. Yeah, I mean that's where the kids' toys, they either get broken, lost, or the dog eats them. So it's
it, man.
Who plays with GI Joes anymore?
Heck, I didn't do that when I was a kid. That's not true. I did.
Every kid had the GI Joes in the backyard,
Hey, can we look at Roku? I want to get your thoughts on Roku because they report earnings tonight. They're stuck in this battle with Google over YouTube in terms of getting YouTube and YouTube TV on the Roku platform. And I don't think it's resolved yet. The bar is awfully low for them, based on what Netflix said, based on what Comcast said, and what Disney said. But wait, Disney didn't actually wait. Did Disney report yet? I may have made that up.
I have a Roku TV, if that matters.
I've got one too that I hardly use, but the bar is so low for Roku into this report. Its stock's been so punished. What do you see here?
I see you have a big drop off down to 280 and 260 is the big levels I see to the downside. If you're looking for an upside play, you might get back to 320 it's going to take a minute, but I mean, this one, it just depends. If they blow it away somehow on earnings, then you've got a decent play here for anyone that's looking at a technical standpoint. I think, let me just I always got to put it on here and see if it fits. I always make it too big. There we go. So if I'm correct on the downside, you've got this big move all the way down there. So let me pull this up. Yeah, I mean, depends on your risk. If you come down here and you say, okay, I'm going to really put on 5 to 6 point risk, then nine points to the upside. Don't try to get all of that 320. Try to get yourself even just a target of maybe an equal 1-to-1. Drop this down to 305-ish, but this is scary to me. This looks like it could come all the way back down to here. So that's how I see it. So if this is a short position, which we can definitely show you that real fast. This is kind of where, if I don't like it on a long, then look at it as if you were wanting to short this, and where would you, what looks clearer, what looks like it could happen more than the other. And to me, it looks like it at least come back and try to test this. And if it breaks down to the lower side, so you'd want to get in once it broke past this low. You wouldn't want to jump in right now. You'd want to wait for it to, I almost point at the screen. I almost pulled a Joel Elconin. Oh my goodness.
Don't go there, man.
I hope you're not watching this, Joel. But no, 308 to 303 for the, that'd be your target for that one. So I'm looking at this. I would rather just stay away from it. And this is that's what I would do. I'd maybe let the news come out. Let's see what it does.
TJ is thinking a thought that we've all thought at one point or another in our investing or trading lives, which is, yeah, I could buy this dip.
Yeah, and then it just drops.
TJ's thinking that in ATVI. Man, I spent all of 2017, 2016, even part of 2018, calling bottoms in stocks. I called the bottom in Under Armour wrong, GE wrong, Kraft Heinz wrong. Who else did I call the bottom in that I was wrong in? I'm sure there was a half dozen others. I was wrong in basically all. I think one of them I got right, but yeah.
So I have an Activision trader, lover, video game guy, and this is something this is a trade that you can see that I did back in what is that, like 2016? So this is literally started in 2016 as well, because this is how I can remember when I traded, and we can go back and we're doing lessons and things like that. So I got in right here, and then you have your line when you get out, and this is when you got out, right? This is when it broke through. That's when we got out, and I haven't looked back since, to be honest. I let it go in August of 2019. It looks like,
nice.
February of 2019. There, right before that big dip, I think. So the reason why I did is because I felt like my generation, the 90s, the 80s guys, we got married and we're no longer allowed to play video games every day. And we didn't buy the newest Madden anymore. We're not buying the newest Call of Duty anymore. We're waiting for a year for it to go by, or we're getting it for a birthday or Christmas for our kids so that we can play the game. So it's to me, it just seems like, especially with Facebook and Metaverse and all this talk, to me, I think that's another bad thing for Activision unless they somehow get tied into that conversation. But traditional gaming is going away, and I think we're looking for a more heightened experience, and that's where kind of where I'm going with it. And I think that,
yeah, I hear you. I think you're probably not wrong. Then there's also the school of thought that, well, I mean, they still have huge franchises. They still have Call of Duty. I mean, at one point, do you say enough is enough here? This talking about a stock that was $100 in February, and we're 65. But we see if you go back far enough, you look at Activision. It's very cyclical, right? It's in favor, it's out of favor. It's in favor and out of favor. So, we're a long ways away from those lows.
$70 is where you wanted to get it, I guess, is what they're saying. So 70 was the key. Now you're at the point where they've already made a bottom for you here. So this might be a good call if you let the dust settle for a day. I wouldn't go in buying today, but maybe end of day tomorrow if you guys can stomach the pain of waiting and maybe losing out on a point or two. This could be something maybe you just wait for the dust to settle a little bit after today. That was a big drop today. So
we'll do like one more here, one or two more. They can look at Sava. There was a news short report out this morning on SAVA from a firm, I don't know, Quintessential Capital. This is the company with the Alzheimer's drug and the questionable data around that. And I have not heard an update about that data. And
who is it?
Sava, SAVA.
I haven't heard. That was all over the chat for a while. I traded Sava a little bit. I think I traded this on in a pre-market session and then was out before 9:30. But didn't this have like a split of some sort or something?
No, it wasn't a split. They came out with some data for their Alzheimer's drug and then the data got called as a question. And then I was like, wait a minute, how good is your data really?
They had a short report that came out, right?
This morning, yeah.
Oh, okay, this morning.
Well, there may have been at least one more. Yes.
Yeah, I thought there was one, and then that's when this happened. But let's see. 4250 is way down there, so you've got 5159, 5150 in this area right here is your downside risk, and then your upside is whatever you think it might go from this last move from 62. So probably right here at 56, 58. This might be a couple bucks you might get out of it, but short report wise, if you're, in my opinion, you're looking to short this thing overnight maybe and get a day two reaction to this. So.
All right.
Kind of the triple D play where he's like, that's kind of just like we were saying before, maybe not buy the first day, wait for it to settle for a day or two and then take your position. But this is the one when you're on the downside, you get a bad report or you get some bad news, they get hit really fast. And then you find out where they're going to consolidate, where people feel safe, possibly shorting them again. That's what they're usually doing on a bad report. And then, take some profit in the pre-market if they get a dip in the morning.
All right, Jesse Kaler, the link to his site is in the description, and he joins us every Wednesday when we have normal programming to hang out.
All right, the Fed
in 2 minutes.
All right, everybody get your popcorn, turn your TVs.
Hold on tight, hold on to each other. We're about to get some tapering, we think. We're not quite sure. Maybe, I don't know.
My $50 steaks at the local grocery.
It could happen if we don't start tapering, or if we do start, I don't even know. So we'll find out in a minute and change. Jesse, the pleasure as always to hang out. See you back on next week.
All right, see you guys.
All right. Okay. So I do want to wrap the show up because our NFT show is on next, the roadmap. I want to get to that because those guys are on fire right now. But maybe we'll just hang out until like 2:01. AB, just to get like the new just to be here, and I'm gonna pull up a chart of the SPY, and I'm gonna pull up a 1 minute chart. While I do that, can you get in your pro for a minute here, and let's just see what's what.
I'm trying to do one better and try to find just a stream that we can pull up on the show real quick.
Yeah, you can do that. Just go to YouTube, search FOMC or Federal Reserve. When are we tapering? We know interest rates are going to stay at zero. That's not what we care about. The dot plot is interesting, right? The dot plot is just the Fed governor's expectations of when they could start raising rates. But let's see. Let's watch the. Oh, we're moving now.
It's the conference isn't until 2:30.
No, that's the press conference. But the announcement should be out right now. Yes, the leave rate's unchanged. We know this, but we know this. What did they say about the taper? What did they say about the taper? Let's go quickly.
Oh, here we go. I got someone streaming it.
Streaming. It was nothing to stream right now. It's just let's go to a news feed. Boom. Oh, here's the statement. Okay. I will bring this up on the screen. How do I do that? Stop share. Share screen.
Can't get through that. I see us going up and testing that pre-market high. We are just chopping around here. It looks like there is a little bit.
Come on, don't do that. Take it off.
Into the
Take
market.
it off because I'll have to hear about it later. I'll have to hear about that later. Okay. Here is the statement. It's up on the screen. Bada bing, bada boom.
And SPY's going up.
Unchanged. You know what? Screw it. Control F. No, that didn't work. No, that didn't work either. This is nothing. It didn't say. Okay. I don't even know what that says. Didn't say anything about the taper. How are we doing on the charts? What's the SPY doing? Anything good?
Yeah, SPY, it spiked up a little bit. I'm seeing tapering starting November with monthly reductions of 15 billion. Prepared to adjust taper pace as warranted.
I'm seeing 10 billion. Yeah. Okay. So yeah, they're cutting their treasury purchases by 10 billion a month. They're cutting their mortgage-backed security purchases by $5 billion per month. So yeah, there's that 15 billion number. So, okay. Tapering starting in November, accelerating in December. All right. We've been talking about this thing all freaking summer, all spring, all year. It's nice to at least start, and then we'll go from there. So, all right. The roadmap, our NFT show is live right now. That was fun. Thanks to all of our guests today, all like 6 of them.
Yeah, we had a packed show, Spencer. And if you haven't already, please smash the like. We're doing our best to bring you guys this content free of charge. Hang out with us every day as we break down the latest in financial markets and any news that could be, impacting your stocks, really. So come hang out with us, smash the like. And yeah, without further ado, let's go ahead and get over to the roadmap.